What's up guys, Kevin here, and I know there's a little bit of a change in scenery in this video. This is not permanent. I just completely forgot to film this video before I went on vacation. So we're recording this while I'm traveling so I can stay on my video schedule, but hopefully all of you had a safe and happy holiday and you've got re-energized and you're ready to kick off 2025 strong. Now in this video, we're going to start talking about taxes. In particular, we're going to focus on tax brackets. This was the first area that I started doing research in so that I could get a better understanding of how taxes worked and try to understand why I owed so much money and what I could do to reduce how much money I owed so I could keep more money in my pocket, because obviously that helps us get to financial freedom, and that is the end overall goal. So I thought I'd start here to kind of explain how it works, what it is and what it isn't, and hopefully dispel some of the myths and things that people believe that aren't actually true so that you can do some better planning in 2025 to minimize how much taxes you owe. So let's go ahead and jump into the topic at hand. Now, first of all, let's take a look at an example of tax brackets, and we're going to look at the ones from 2023 simply because we already filed those taxes, hopefully, and those are completely done. They won't change or anything like that. So we can look at that as something that is locked in the books. So this is what the 2023 tax brackets looked like. If you had up to $11,000 of taxable income, you got taxed at 10%. If you had up to $44,725, you got taxed at 12%. If you went up to $95,375, you got taxed at 22%. Up to $182,100, you got taxed at 24%. Up to $231,250, you got taxed at 32%. Up to $578,125, you get taxed at 35%. And if you're one of the blessed individuals that made more than that, you got taxed at 37%. Now, the first thing I think I took away from this is I was surprised to see how low that highest tax bracket was, because you always hear, so-and-so made $1 million or whatever, so they probably gave half of their money to the government, when in reality, it can't go over 37%. So even if they took 50% of your income from your paycheck, at the end of the year, they're going to be giving a significant portion of that back just because of how the tax brackets work. But I wanted to do a little more research, because let's say you made $44,000 last year and then this year you got a raise and now you made $45,000. Do you suddenly owe 10% more taxes? Are you going to have less money in your pocket simply because you made more money and went into that new tax bracket that got taxed at a higher rate? That didn't really make sense to me. Now, I think we all can agree that if taxes are going to be a thing at all, then you should pay more taxes as you make more money. The people down at the bottom that are making the least amount of money shouldn't be carrying the economy. Now, the problem is, let's say you get taxed at 20% and everybody gets taxed the same amount. Yes, as you make more money, you pay more, because 20% of $1 million is more than 20% of $20,000. But if you're only making $20,000 a year, paying that 20% is going to be a much bigger hit on your finances. So it's not really something that you can just put a flat rate on every amount of money that you're making to pay those taxes, because it's not really fair to the people that are in the lower classes. So really what you want it to be is kind of a curve, where as you make more money, you're exponentially owing more money to cover the overall taxes that the government expects to see at the end of the year. Now, the problem here is accountants do not want to do that math. They want to do 4 different operations: plus, minus, multiply, divide. That's it. So you can't add math with exponents and quadratic equations and stuff to calculate how much taxes you owe. So that's where the tax brackets actually come into place. And the key here is that middle line. The reason why that middle line is important is because tax brackets apply to a range of money that you make during that year. So it's not taxed on your entire taxable income. It's only taxed on the portion of your income that falls within that tax bracket. So if we look at this chart again, you're not getting taxed 22% all of a sudden just because you got a raise and now you're making $45,000. You're only getting taxed 22% on money you make above $44,726 up to $95,375. So if you made $45,000 this year, you're only getting taxed 22% on $275. That's it. Everything else is still being taxed at the 10% and 12% rates for that bracket of income that you made. So as you make more money, yes, you get taxed more, but only on the money that you make above the lower end of your tax bracket. Now, because I'm a little bit weird and I like looking at numbers, I turned this into a graph. So I plotted every amount of money that you can make from zero all the way up to $200,000. And yes, of course, as you saw with the tax brackets, this extends up over $500,000. But just for illustrative purposes, this is how the graph looks. So you can see it actually tries to replicate the idea of paying exponentially more taxes as you make more money, because the line looks like a curve. Now, in reality, at each of these points, there's a new tax bracket. So there's a marker at $11,000, $44,725, $95,375. You know, each spot where the tax brackets change, there's a marker there, and the lines just increase and get steeper and steeper. So it's not a smooth curve, but it tries to create that shape so that our taxes look like what we expect them to. Now, another thing I've seen confuse people is how to calculate your taxes using this method, because, you know, it's a lot of numbers and percentages to try to calculate. And so if you look on the back of your tax paperwork, which, yes, there is a back and some of us look at it, it tells you exactly how to calculate your taxes. So it tries to simplify things by giving you a percentage as well as a certain amount to add to it. And it seems like pseudoscience, like where are these numbers coming from? But if you look at the tax brackets again, you'll realize that $1,100 is 10% of $11,000. So all they're telling you is because you're above that $11,000 tax bracket, you're automatically adding $1,100 onto the taxes you make, plus the 12% above $11,000 that you made. Now, let's say you're making above $44,725. So now you're getting taxed at 22% of what you make over the $44,725, plus an amount that's equal to 10% of 11,000 plus 12% of the 44,725. So it's just giving you that value to add on to it. So you're not trying to do all these percentages and add them up, and it simplifies the math for you. So hopefully this makes sense, because I hate to hear people say, oh, I'm making too much money, now I'm getting taxed more, I've got less money in my pocket because I'm in the wrong tax bracket. That never happens. There's never going to be a point where you make slightly more money, so suddenly your actual income that you keep is less than what you would have had if you made less money. You're going to continue marching up that curve, hopefully, as you make more and more money over the years. And yes, you will owe more money, but you should always have more money in your pocket after it's all said and done. So let me know if there are any other topics you guys want me to cover. I plan on talking about tax deduction specifically, because that was the next thing that I dug into. And I think there's a lot of meat there to make sure, again, you're minimizing how much taxes you owe. But overall, this is a really complex topic, so I think there's a lot of content to cover in the future. But yeah, I think that's all I had to say for the day. So thank you for stopping by. Don't forget to like and subscribe, and I'll see you on the next one.